Okay, in the previous video, we took a look at preparing this schedule for the cash received and how we then calculated each of these numbers, which is also shown to you below the schedule as to how they got each number. Now, once you have all these numbers in the correct quarter, then you will just add them up. So for quarter one, we expect to receive $10,600. For quarter two, $11,850 in cash, etc. for each quarter. Now we can continue on to cash disbursements. Okay, these are the cash that we're going to pay out as opposed to the cash that we received. Okay, and any expenses that don't require cash, something like depreciation, we debit depreciation expense, we credit accumulated depreciation. There's no cash we're ever going to receive or pay out. So we just exclude that from the list. Okay, but then we go through every other expense that we are going to have to pay cash, maybe not this quarter, but next quarter. So if we receive a utilities bill in March, well, typically we're not going to pay that utilities bill until April, which is part of the second quarter. Okay, so we also need to figure out a schedule for payments. Okay, so Texrex purchases all their raw materials on account. 80% of the purchases are paid for in the quarter that we purchase them, and the remaining 20% are paid for the following quarter. The purchases for the fourth quarter of the prior year were $5,000. Okay, and remember that we calculated out the direct materials budget, and we did ours in a previous video just on the blank shirts, but there's also one in the book on ink as well. And so those direct material budgets come down to the exact amount that we're going to have to pay on those direct materials. So in quarter one, the total for the blank shirts and the ink that we're going to have to spend on those direct materials is $44.92. For quarter two, $51.76, etc. All right, so now we're going to have the cash payments schedule, just like we did with cash receipts. So for quarter four, we had $5,000 worth of purchases, we were told in the previous slide, but 80% of that $5,000 got paid for in quarter four of the previous year. 20% of that $5,000 would get paid for in the following quarter, which is quarter one of our budget year. So 5,000 times 20% is how we got this $1,000. Then we said that for quarter one, for raw materials, we were going to need $44.92 total for the blank shirts and the ink. And out of that, 80% gets paid for during quarter one, and the other 20% gets paid for during quarter two. In quarter two, we said we'd have $51.76 of raw materials that we had to purchase. Of that, 80% we'll have to pay for during quarter two, and the other 20% we'll pay for in quarter three. Okay, and we follow along just like that. Okay, then we add up our totals, and so for quarter one, we would have $4,594 of cash that we need to pay for these purchases of raw materials. For quarter two, I would need $5,039 to pay for purchases of raw materials, etc. Okay, then we take a look, they expand the basic cash budget formula by adding lines to show any borrowing or repayment, and then we can see if we have a cash excess or deficiency. Okay, and we have a minimum cash amount that's company policy, and if we aren't going to have enough left at the end of the quarter, then we're going to have to come up with some new borrowing. Okay, we're going to have to get a new short-term loan or something, a line of credit with the bank where we can pull some of that out. Okay, if we happen to have a cash excess, then we may want to either pay off some previous borrowing, or we may want to invest in some short-term or long-term investments. Okay, and then so the last line of the cash budget is the ending cash balance. Okay, so here we're going to actually make a cash budget. $1,000 minimum cash balance is required. That's the policy for TexRex at the end of each quarter. Money can be borrowed and repaid in multiples of $1,000. Interest that is charged to us is 12%. So we have to figure out not only how much to pay some previous loans back, but we also will have to pay the 12% interest. Okay, interest payments are made only for the amount of the principal being repaid, and all borrowing takes place at the beginning of a quarter, and all repayment takes place at the end of the quarter. Okay, so budgeted depreciation is $540 per quarter for overhead, $150 per quarter for selling and administrative expenses. The capital budget for the coming year revealed plans to purchase additional screen printing equipment, and we're going to need cash of $6,500, which will take place in the first quarter. And they plan to use their regular operating cash. If we need to, we'll get short-term loans to help pay for that $6,500. Corporate income taxes are approximately $3,469, which we saw on the budgeted income statement, and they'll be paid at the end of the fourth quarter. Okay, the beginning cash balance that TexRex has is $5,200, and they want us to round everything to the nearest dollar. So here is our cash budget. So again, we started the first quarter with $5,200. They just told us that. The cash that we're going to expect to receive in the first quarter, that came from that schedule of cash receipts from the previous video, $10,600. So the total cash that's going to be available in the first quarter is those two added together of $15,800. Then we're going to show the payments for raw materials, $45.94, that we calculated out in a previous slide. Plus we need cash for direct labor for the first quarter. That came from the direct labor budget that we did previously. And we need for overhead $17.41 to pay for it. That came from the overhead budget. The selling and administrative expenses, we need $16.70 for it. And for the equipment, for that capital budget equipment that we're going to buy, which we said we were going to put that in the first quarter, that's $6,500. Now, do realize that out of the overhead and the selling and administrative expenses, we took out the depreciation. So this is just the part that we're actually going to pay cash out of. Okay? So I add all of those up. Those are all the cash amounts we expect to pay out in the first quarter, and that's $15,777. So we were going to have $15,800 available minus our $15,777 that we expect to pay, and that gives us only $23 left over. Okay, and that's not enough. The policy says that we have to have at least $1,000. So to be able to keep to the policy, we're going to have to borrow $1,000. Okay, and so then our ending cash balance will be the $23 we have left over plus the $1,000 we're going to borrow from our line of credit or something, and we'll have then $1,023 in our checking account. Now, the ending balance of the first quarter becomes the beginning balance of the second quarter. So we start out the second quarter with the $1,023. The $11,850 came from our schedule of cash received that we did in a previous video, and we add those two together, so we have total cash available for the second quarter of $12,873. Our raw materials cash that we're going to need was shown in the previous slide. Our $1,512 we need for direct labor was from the direct labor budget we did previously, the overhead budget, and the selling and administrative expense budget, except we're going to take out the depreciation out of the overhead and selling and administrative expense budgets because those are not cash. Okay, so we add all those up, and we get $10,202. So what was available, $12,873, minus what we have to pay out, $10,202, gives us an excess of $2,671. Now, since we have enough to pay off the borrowings from the first quarter, we're going to go ahead and do that. So we're going to pay off that $1,000, and we have to pay off the interest. So how did I get the $60? We have $1,000 principal, using the simple interest formula, which is principal times rate times time. So over here on the right, it shows you that our principal, $1,000, times our rate, 12% interest, times time. This is 6 months out of 12, okay? Because we got this borrowing at the beginning of the first quarter, but we're not paying it off till the end of the second quarter, so that's 6 months. Okay, and so when I multiply that all out, I get $60 of interest that we're going to have to pay. So that total is $1,060 that I'm going to pay back on the loan, and $1,060 taken from $2,671 means I'll have $1,611 left for my second quarter, at the end of my second quarter, which becomes the beginning of the third quarter. Now, in the third quarter, we have available $16,386. We subtract out what we have to pay out in cash. It gives us enough extra. We don't have any loans we have to pay off, so that whole extra is in our ending balance. It becomes the beginning balance of the fourth quarter. Okay, and that has $23,387 available. We have to pay out $16,803. So we have $65.84 of excess. We don't have any loans to pay off, so we end up with $65.84 at the end of the fourth quarter. That will become the beginning of the first quarter of the following year's balance. Okay, so here is our cash budget, and now we know exactly what we need to do each quarter to make sure that we can get through with the cash that we're going